Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, the Federal Reserve officials stick to interest rate cut plan as they raise their US GDP forecast, as well as that Christine Lagarde says the ECB will not commit to a path of rate cuts. We've got lots to talk about on the charts. Also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article to talk about is to do with the Federal Reserve. Now, the Fed has now indicated that they still expect to cut rates by 75 points this year. This comes as they also raise their forecast for economic growth and inflation. Now, this, of course, is a very, very important article, and obviously talks about that key piece of data that we did receive yesterday that we've kind of been talking about all week and highlighting as the most important piece of data affecting markets, especially US markets, such as including US equities, of course, and even assets such as gold and others. So that's why this was a very key piece of data. Now, of course, we've talked extensively about the Federal Reserve, about the US interest rates, about things going on within the US which will affect inflation, employment, and that kind of thing. And this is all so important because, of course, the Fed's monetary policy basically ends up dictating the way the market does move quite often. This is macro. This is why we kind of look at what Powell is thinking and then take that to the markets. And as we'll get into on the charts in just a moment, the news that we did receive yesterday from Powell, from the Federal Reserve, has certainly influenced markets greatly, with gold up, dollar down, as well as that we've seen US equities rise monumentally, pushing for all-time highs and making new all-time highs as we speak. So, there's quite significant actions taking place within the markets at the moment as a result of this Federal Reserve rhetoric and interest rate decision. And of course, we've been talking about the Federal Reserve's interest rate choices in the coming months and their kind of interest rate plan for quite some time now. And this is largely because last year, maybe midway through the year, September, October, the Fed's rhetoric was so different to what we're hearing now. Of course, back then, we were still expecting rates to possibly even increase further. We were looking at a 0.05 rate increase by the end of the year last year. And now this has obviously changed monumentally to the start of this year, where we were actually hearing from the Fed, we were hearing the possibilities of rate cuts beginning in March. Of course, we now know that that is certainly not the case. We were hearing the possibility of that happening in April. So there was kind of this very dovish period within markets, and that's where we really started to see US equities and other US assets, which depend, of course, on the Federal Reserve's interest rates, skyrocketing basically, because they were expecting these rate cuts very early. Obviously, we've seen this not play out how, of course, the Fed expected, as we always do. That said, though, we are still kind of hearing this dovish message from the Fed, despite certain data sometimes, kind of hinting towards other kind of, aspects of the US economy, which might actually present, maybe a more hawkish picture for monetary policy, in terms of, I know I've worded that poorly, but I'm sure you get what I'm saying here. And ultimately, what we've heard in this recent FOMC meeting, this interest rate decision from the Fed, is basically that they want to stick to that interest rate cut plan, which of course was a far more dovish plan than the thoughts and rhetoric and plans that we were hearing last year. Now, what is that plan from the Fed? Well, that is that 0.75 percentage point cut kind of plan for this year. So we are expecting the Fed to conduct 3 different 0.25 percentage point cuts this year to the US interest rate. And this is because, of course, we're starting to see inflation drop to levels which could be considered, safe levels of inflation. Those 3% figures that we've seen recently from the US inflation figures is, of course, far closer to that 2% target figure than those 10% figures that we were talking about not too long ago, back in 2022 and 2023. So, certainly the Fed's in a much better position currently to start talking about interest rate cuts. And it does seem like, when they first said at the start of the year that they looked to cut interest rates by 0.75% this year, it does seem like the Fed wants to stick to that, which is showing, the Fed is sticking to its word, the Fed is sticking to its plans, and is likely to also influence the way investors do see the central bank, in the coming months in regards to the way they conduct their monetary policy. But, this meeting has certainly pushed investors closer to the idea that the Fed will certainly now conduct 0.75 percentage point cuts this year, which is very significant considering the amount of inflation that we did see take place within the US last year and the year before. With these latest forecasts, so the US GDP forecast by the Fed, sparking a rally in US equity markets, with the S&P 500 and Nasdaq both reaching new all-time highs as their bond yields also fall. Now, the Fed voted unanimously to leave rates unchanged at their current all-time high, with the recent decision and statement by the Fed putting the trajectory for rate cuts clearly on a path for the first rate cut to take place in early summer. This would certainly help Biden in the lead up to the presidential election, with borrowing costs and mortgage rates having soared in recent months. The Fed officials also upped their forecasts of US economic growth from 1.4% to 2.1% this year. That said, Powell also signaled that a sure soft landing this year may be complicated for inflation. So, that's also a very interesting comment from, the Fed the head of the Fed there, Jerome Powell. Now, whilst the meeting showed officials were still interested in significant rate cuts this year, the meeting also showed officials were more hawkish on longer-term rate cuts. Ultimately, though, the meeting destroyed the claims by traders that higher inflation could influence the Fed to only make 2 rate cuts this year. Following the meeting, the S&P 500 rose 0.9% and the Nasdaq rose 1.3%. So very significant moves taking place in the US stock market as a result of this kind of meeting and information. So a very important article that we've covered here, and we'll come back to it, after the next article when we're on the charts analysing what's going on in the markets. Next article to talk about, though, of course, is with Christine Lagarde and the ECB. Now, Christine Lagarde has now said that the ECB will be unable to commit to a particular path of interest rate cuts once it starts to loosen its monetary policy. This comes despite signs that wage growth has peaked in the Eurozone. Now, this is, of course, a very important article to bring up here, and, kind of returns to the topic of interest rates that we've just spoken about with the Federal Reserve. And, obviously the ECB, the head central bank of, the Eurozone, basically, is, of course, a very important central bank of the most, of the second largest, I guess, economic area of the world, and, is a very important, leader. Christine Lagarde is, of course, that we need to kind of talk about. So, obviously we had that Federal Reserve interest rate decision yesterday, but still, keeping your eyes on what's going on with the ECB is just as important. And here, of course, we are talking about, the commitment to a path of rate cuts. So what we're kind of hearing from here, from Christine Lagarde here, is basically that, they're looking to test, a rate cut, bring down rates a bit, but ultimately once those rates are down, they can't say whether they're going to continue those rate cuts in the same way that the Fed is committing themselves to cutting interest rates by 0.75% this year. Christine Lagarde is basically saying that we can't do that. Ultimately, we don't understand where wage growth and inflation may be, this year following any rate cuts. But as we've said many times, it's looking very bleak for, the Eurozone economy should the ECB not cut interest rates, as ultimately inflation is quite significantly down, and ultimately, growth has weakened so much within the Eurozone that in certain nations such as Germany, there's certain worries starting to grow just around, the economic landscape. And obviously this can't last, otherwise ultimately the Eurozone will have a great deal of economic problems, and there won't be any inflation to really deal with, because ultimately inflation within the Eurozone is quite close to target levels of 2% anyway. So the ECB is kind of forced into this position now where it does need to make a rate cut, but ultimately can't decide on what will then need to happen following such a rate cut, as the position that the ECB and the Eurozone will be in is one of complete uncertainty. So, quite a large difference to the rhetoric that we were hearing from the Fed that we're now hearing from the ECB. With this rhetoric creating a picture that even should rates begin to be cut in June, which is the expectations, it is likely that markets will have to stay in the dark on the actual scale of any future cuts. Lagarde, in her speech, said that continued high wage growth and weak productivity in the Eurozone meant that services inflation was expected to remain for most of the year, with this forcing the ECB to keep a close eye on any incoming data on inflation. This is, of course, a kind of piece of rhetoric here that we've heard from all of these central bank leaders across the advanced economies of the world. Now, earlier this March, the ECB had to cut its inflation forecast to 2.3% and then 2% in 2025. The ECB has now signalled that June is the earliest possible date for rate cuts to start. She did, however, also say that the ECB inflation forecast had become more accurate recently, obviously following the less reliable forecast more than 2 years ago. The ECB largely looks to wage growth as a predictor of inflation, with the average wage growth expecting to be 4.2% this year, which is down from 4.4% in January. So, very significant news here in regards to the ECB and Christine Lagarde. So keep your eyes on all things Eurozone and ECB. That's all to talk about in this article, though, and the articles as a whole. Next to talk about, of course, is the charts, where we do have a great deal of movements happening. And to begin with, we are, of course, on the US 30, talking more broadly about US indices as a whole, but ultimately on the Dow Jones, we're seeing a great deal of bullish movement. And this is, of course, following the Federal Reserve's interest rate decision and meeting, where we did, of course, hear the more dovish rhetoric that the Fed was committing to those 0.75 percentage point rate cut this year, which, of course, is causing US equities to now rally as a result of that kind of more dovish rhetoric being priced in. And it's quite interesting to see price rising after this kind of meeting, because whilst we did hear that more dovish rhetoric in that sense of committing themselves to that 0.75 percentage point rate cut, ultimately we also did kind of hear that more hawkish rhetoric in regards to the more longer term picture for the Fed and their interest rate cuts, as whilst Fed officials were happy to think about making lots of rate cuts this year, ultimately the number of rate cuts then going into 2025 and further on was certainly reduced greatly, and actually saw a change in a more hawkish manner since the last meeting. And that's something that I think is very important to know. And obviously we expect usually less movement on something like the US 30 or the US 500 or the Nasdaq when we do see the Fed come out and make these interest rate decisions, ultimately because they are less affected by the Federal Reserve than maybe these smaller companies and smaller company indexes. But ultimately, the rhetoric matters nonetheless, and we have now seen the US 30 push to the upside and is now making new all-time highs. So very significant moves on the US 30. Still on top of the US though, next to talk about is the dollar. Definitely keep your eyes on the US 30 though at the moment, as going back to it for just a second, price has now broken those all-time highs, right? So we do always have this opportunity of price coming back down and retesting these areas of old liquidity. So definitely keep your eyes on the US 30. Next to talk about is the dollar. As I've said, where we have seen a significant sell-off after hearing, that rhetoric from the Fed. And, this obviously comes after some very interesting price action on the dollar recently, with, price since the start of March declining greatly to the downside. Then we obviously found a great deal of bullish momentum at this kind of area of liquidity down here. Price made its way back up to those areas which it started off at in March, and now we're obviously seeing this sell-off take place after the Federal Reserve's interest rate decision and rhetoric and those growth forecasts. So certainly some very interesting moves taking place on the dollar right now. I think it's just hard to kind of grasp where price could be moving, as this data that's been released, this information that's been released, is just creating a great deal of volatility on the dollar for the moment. And I think certain other assets still related to the dollar or related to the US indices or something like that is still worth trading, but ultimately the dollar's just in a weird position at the moment after that decision. So keep your eyes on the dollar, but be apprehensive at the same time. Next to talk about is the Euro USD, so still on the topic of the dollar, to be fair. And obviously in yesterday's market briefing, I had highlighted how price had made its way down to this 78.60 Fibonacci retracement level, and that was creating a lot of bullish opportunities for price to move to the upside, as this was a kind of key area that price had interacted with. And since then, we have of course seen price rise significantly to the upside and is now pushing for those recent highs. And this is obviously following the Federal Reserve's interest rate decision, and is obviously also being influenced by Christine Lagarde's comments yesterday as well. So both of those articles that we covered obviously relates greatly to this FX pair, and definitely keep yours on Euro USD. Next, talk about those pound yen, which is also in a very interesting position, continuing to make new highs not seen for years and years. So very significant price action on pound yen at the moment, just a great deal of bullish momentum. If we just kind of zoom out, or actually zoom into the older price action, and we look at the way price has actually moved away from it, you can just see how significant this bullish momentum has been since, of course, we did hear the decision from the Bank of Japan to end its era of negative interest rates, but those signals within the economy obviously hinted towards there being no further rate increases, and that's obviously created a very a kind of bearish image for the yen, and as a result we're seeing now pound yen rise to the upside. So pound yen definitely to keep your eyes on, and definitely some retracement opportunities lining up right now. It's just whether you are able to wait for that and strike on it when it does arise. But that 38.20 is looking interesting, so keep your eyes on keep your eyes on pound yen. Next talk about though is Bitcoin, which has been trending down recently, after this period of great bullish momentum. We've seen this kind of short-term bearish retracement, and price did come into contact with that 78.60 that we did highlight in yesterday's briefing, but seemingly following the more dovish comments from the Fed today, money has flowed once again back into Bitcoin from this 78.60 level, and price is now once again on the rise. Whether price can now break above this area of significant liquidity on Bitcoin is the true question though, so keep your eyes on Bitcoin. Next talk about is gold, also very interesting. Obviously following the more dovish comments from the Fed, we've seen a great deal of bullish momentum on gold, as gold is a safe haven asset when compared against the dollar. So when people are taking their money out of the dollar because they don't think it will gain enough interest, they'll put that into gold, and that's why we're seeing now gold rise to the upside, breaking out of this bullish flag, which I've highlighted over and over again recently, as it would just seem like the perfect kind of flag that was forming, and price definitely used this liquidity down here at this previous all-time high and key Fibonacci level of 23.60 to rise higher and make new highs. So keep your eyes on price, and let's see if price can make it all the way up to the 22.50 mark, around that 27.2 minus 27.2% Fibonacci extension level. Finally, to talk about the charts though is oil. Not too much happening apart from the fact that price has actually now retraced after a great deal of bullish momentum recently following those new IEA forecasts for oil supply and oil demand. But since then, we actually yesterday we did see this kind of sell-off, retracement with price now making its way back down to this key area of resistance and liquidity. So maybe we can now see price continue this move to the upside after this short retracement. So certainly keep your eyes on oil. Next, talk about though, if finishing with the charts, next talk about of course is the economic calendar, where we're getting so much data today and so much of it is very significant. So I'll try and get through all of it quickly though, because I know we're pushing on quite far into the briefing. Now we are getting the Aussie unemployment rate figure, followed by the British public sector borrowing figure, followed by that the French business confidence figure, and then the ECB's General Council meeting. Followed by that, we're getting the French manufacturing and services figure, as well as the German manufacturing and services figure. Followed by that, some more Eurozone-based kind of data, well, not Eurozone, but European data from the Swiss, where we're getting their own interest rate decision. Followed by that, we're getting the Eurozone's manufacturing and services figure, and then the British manufacturing and services figure. And most importantly of the day, we're getting the Bank of England's interest rate decision. So very important for the for pound yen as well as gold. So listen out for that one. And finally, we're getting the US manufacturing and services figure, followed by, and lastly, once again, very important to pound yen, we're getting the Japanese inflation rate figure. That's all the data that we're getting today. It's of great significance to you. We've covered lots on the articles, lots on the charts, and lots on the economic calendar. But that's all from us at Wildwood Capital. Hope you have a great trading day. See you later. Bye.